Welcome to the Breakfast Leadership Show, where we interview global thought leaders on business, leadership, and life. Here's your host, keynote speaker, best-selling author, and chief burnout officer of the Breakfast Leadership Network, Michael Levitt.
Welcome back. I've got Will Rhind on the line. Will, how are you?
Very well, Michael. Very well, thank you.
Great to have you on the show. We're going to talk some investing today and all kinds of different things. And we talked a little bit in the pre-show about the timing of this recording is right after the U.S. presidential election. And at this moment in time, we still don't know who actually is going to be declared, but eventually we'll get there. But we talked about how situations like this can make the market a little volatile. And when investing, that's one thing you're kind of afraid of, or you can look at as an opportunity. But before we jump into that too much, share with the audience a little bit about you and how you got into this role, and then we'll dive right in.
Sure, no, happy to. So I'm the founder of a company called Graniteshares, and we're an asset manager, but we specialize in a particular type of fund called an exchange-traded fund. So put simply, that's just an investment fund that is listed on a stock exchange, and you buy the shares of just as you would buying shares of Apple or any other company. So we offer a number of different types of exchange-traded funds, anything from gold to large cap equities. The firm is we're based out of New York City. That's our headquarters. But I've been doing this for about 20 years. So although this is now my own business, I've been in the asset management industry for the last 20 years, sort of building and managing businesses within the exchange traded fund space.
And it's a great field. And a lot of people, aren't necessarily familiar with these funds and how they are made up of, because even this morning, looking at my own investments, I'm looking at biotech, I'm looking at healthcare, I'm looking at infrastructure and manufacturing a lot, and these are areas where you're going, okay, depending on who ends up being named president, and assuming everything gets sorted out and that person also gets to be president on January 20th, the world's a funny place. We don't know. But depending on who ends up being president, will dictate and what industries may see a rise in investments. And that's why I was looking at some of those things. And, ETF funds are definitely an area to do it. So, share a little bit more on exchange traded funds and specifically, what kind of makes them up, because a lot of people say, well, what stock do I buy if I want to get into biotech or healthcare? Should I look at this or any of those things? And these funds are actually, in my opinion anyway, just my opinion, not giving any financial advice, just my opinion, it is a good way for people to, get into some sectors. And then, of course, as they get more familiar with investing and investing, wisely. I don't know if anybody's ever smart in investing, but the wise tends to be the thing that works for me. But it's a good way for them to get into a particular way of investing in a particular sector or sectors that they like, and then get a little bit more knowledge. So share what you know about that.
Yeah. I think just to kind of riff off of that, where this kind of starts is that people that may or may not have a very specific view in terms of a particular company that they want to buy. And therefore they invest in that company because they like the prospects of the company, they know the brand, whatever the reason is, but they invest in that particular company. Now, for a lot of people, they don't have a specific view on what company is going to do well. What stock should I buy? And so they might have a view of what particular either segment of the market they think might do well, or in your case, for example, you mentioned biotech. So if you have a view that biotech is a sector that could be beneficial, but you don't know which particular stock to buy, an exchange-traded fund is a good option for that investor, because there you're buying a fund that has exposure to a lot of different biotech stocks in that particular sector, in that fund, and therefore you don't have to deal with what we call the stock-specific risk of betting on one particular company versus another. And that's kind of really the beauty of the concept of exchange-traded funds. A lot of people would be familiar with mutual funds. And of course, ETFs, in my view, or exchange traded funds, in my view, are kind of the new technology that are replacing the mutual fund. And they have the same sort of construct in terms of you get exposure to a fund, but it has a lot more flexibility because it's listed on a stock exchange. So you can buy and sell whenever you want. They tend to be a lot lower cost than mutual funds from a management fee perspective, and more tax efficient as well. And so these are all benefits that clearly resonate with a lot of investors, and that's why it's a $6 trillion industry now globally. And so for that, the wrapper gives you exposure to all sorts of different choices, which investors also like. So, it can be biotech, it can be gold, it can be a particular basket of bonds, it can be all sorts of equity sectors and themes. And I think that's really what's kind of at the core of the appeal.
And we talked a little bit in the pre-show too about volatility, and that's one of those things where it's opportunistic in a way, because if the markets are volatile, then you can look at those things. And I think with the exchange traded funds, and I love that you brought in mutual funds, because a lot of people will think, well, it sounds like a mutual fund, but again, you've got more flexibility with it, and there are several exchange traded funds within sectors, and you can really get quite granular about it and go, okay, I want to go in this one, or this one seems to be performing better over a period of time. And again, it gives you as an investor a little bit more hands-on approach, because I've always felt that mutual funds, and yes, you can go in and you can change your risk aversion type of portfolio and say, okay, I'm going to move a little bit from this to this, but I've always looked at those as kind of a static, here it is, this is our bucket, these are what we have in here, where an exchange traded fund, may move some things around a little bit more quickly than you would see in a mutual fund type of environment. Yeah,
and the other thing that's changed, Michael, is that nowadays the way that people access investments is a lot different to the way they accessed investments 20 years ago. And so this is evolving all the time, obviously, but just in the last few years, the rise of investment trading applications such as Robinhood, such as robo-advisors, such as Betterment and Wealthfront, they've really kind of improved the access that investors have to markets and made it a lot easier and simpler. Now, obviously, for Robinhood, etc., you get access to ETFs because ETFs are just traded on the stock exchange. So these apps are not necessarily providing access to mutual funds in a way that the kind of old school way of investing did. And so again, it's sort of adapting with the times, that it's not just about the actual product itself, but it's the way we access financial services is also changing. And that benefits the newer technologies in the market like ETFs.
And the fact that it's you said $6 trillion industry, and that is just going to continue, because again, I love that you mentioned the accessibility, where I've got investment apps on my phone. I can be anywhere and say, you know what, I'm going to buy this ETF, or I'm going to buy shares of this particular stock because I heard somebody say something about, our orders are going through the roof for this particular thing. And I'm like, okay, well, who makes the stuff that makes the stuff? I forget who told me that tip a long time ago, but they said, okay, if somebody, we'll pick on Twitter for a second. I didn't want to get into, individual stocks, but it's like, okay, Twitter. All right. What platform do they use to run Twitter? Well, you find that out and you go, okay, that's the thing that makes the thing. And you go, okay, well, and you find out, and there's, even there's a software that I got, or a stock that I picked up a while ago that more or less is the back end of pretty much every game that's on smartphones. Well, yeah, they're going to do well. So, and again, not giving stock tips, but it's like, as an investor, you be a little bit more aware of what's going on around you, because there's monetization possibilities and investment possibilities. If you just think about, okay, well, who makes this? Or sales of this are going up. Well, who makes that? What are they selling? If Best Buy is going gangbusters, all right, well, what do they sell? All right, well, then you can drill down, and all of a sudden you can start building a portfolio. Or the ETF way, I find, is a great way to do it, because that way it cuts down on the work, because if you're buying 200 shares or 200 different stocks, trying to manage that, I don't care how good you're at Excel or using any type of software platform, that's a lot of work. But if you have an exchange traded fund in the sectors that you're interested in, you can look things up and go, okay, well, good. It's like, oh, there's a little bit of a dip today. Well, it's like buy the dip, sell the rip. It's like, all right, let's go ahead and buy some of that, because that's at a price that's good, and it just it's fun. I mean, I find it fun. I know a lot of people, probably lose their. Well, I lost my hair for some other reasons, but I know a lot of people pull their hair out because they're trying to figure out the market, which is a lost cause in many cases. But over the long term, it does great. So, where do you see exchange traded funds, going over the next 5 to 10 years? And what we see anything new on the horizon coming up with them, other than obviously more awareness, for people that are just getting into investing?
Yeah, I think the industry will continue to grow, because what's really been happening is they've been taking market share from traditional mutual funds, and that's really been the trend since I started in the business, kind of 20 years ago. And so that will just continue as people realize that there's no need for the legacy technology, and people want more choice. They want lower costs. They want more transparency and more flexibility. So I think in that sense, it will grow. Obviously, the number of funds or the strategies that are offered through ETFs will grow as well as market conditions change, because as you rightly brought up earlier, you have volatility, and volatility creates opportunities within the market. And so, the economy is always changing, the market's always changing. And so the investment opportunity set is also always changing. And, the way that technology, for example, is changing, so rapidly that there will inevitably be different investment opportunities in 5 years' time than there are now. And maybe those will be more attractive, less, doesn't really matter. But the point is, there will be different things to invest in at different periods, as the economic cycle kind of progresses. And right now, we're obviously in an environment where we have ultra low interest rates again. We have arguably a dollar that's weakening, and we have a fiscal and monetary environment that favors stimulus. In other words, there's either government spending or money printing through the central bank. And so that sort of trifecta of events leads to certain investment outcomes. And, obviously, if interest rates were to rise, or if government spending was to be cut back, or central bank was to pull back on stimulus programs, then obviously that would change, and there'd be a different set of investment priorities. So I think the key is that you've got choice, you have flexibility, and it's something that I think will continue over time.
And I love the flexibility of them too. And you said something just a second ago that a lot of people don't necessarily grasp is, markets go up, markets can go down a little bit, but not everything is down. There's sectors that do well. There are sectors that will maybe not do as well. When you talked about, again, I think in the pre-show, probably should have hit record the second we started, because I started saying all kinds of fun stuff. But depending on how the outcome of the U.S. presidential election comes, there's going to be certain sectors that will get some significant investment, not only from stimulus, but just initiatives and projects and plans at the state, local, and federal levels in the U.S. and internationally as well. Just gotta remember, there's close to 300 countries on this planet, and some of them are doing some amazing things that impact the work that's being done in the U.S. and anywhere else on the planet. But that's the thing where it's like, you might be, for example, you're like, and tech sector, okay, and you're like, okay, well, the tech sector goes up and down like a yo-yo, and even a couple of weeks ago when it was earnings week, kind of like Shark Week, but earnings week, it was just like, okay, who isn't reporting their earnings today? It was nuts, but most of them, blew it out the door and had beat estimates, beat everything, and their stock went down. And as a novice investor, you're going, wait a minute, what is this all about? Well, everyone in the world was worried about the coronavirus cases. And then, of course, we didn't have the election yet, but everybody was worried about that. So it can be volatile when it comes to things like that. But again, with investment, it's a long-term thing. But again, going back to exchange-traded funds, yes, long-term, but you have the flexibility to move things around and play with it. And take advantage of what sectors are doing. So if there's a big influx in healthcare dollars, well, you're like, well, where do I go? And look for the healthcare ETFs and invest in some of those if that's where you want to go. Population's getting older. Healthcare is going to be around. There's going to be investment in it. It doesn't matter what party ends up winning. There's going to be dollars spent there. But I guess for investors, and I think some of my audience are probably really novice, or maybe haven't done anything in this. What are some? I don't want you to pinpoint specific funds or anything like that, but what are some common ones you see a lot of new investors go to? And I know they kind of go across the board, but is there any ones that they tend to go to, any particular sectors that they tend to gravitate to when they come to talk with you in your organization?
Yeah, I mean, I think the way that we like to think of it is, and again, this is just for obviously simplicity's sake, try and break it down as such. But typically, investors need one of these, either one of these core three things, or all of these three things, which is they need diversification, which means that they need different strategies, different investments that don't move in the same way. And they need a diversified portfolio. They need income, and they need long-term capital growth. And typically, those are kind of the three, what we call the core building blocks, or three pillars of most investment philosophies. Now, some people, obviously, if you're younger, you might not necessarily prioritize income, so that might not be as important to you as someone who's older, for example. But those are kind of the three pillars. And so what we try and focus on at Graniteshares is providing solutions to those. So we have solutions for diversification, for income, and for long-term capital growth. But I think kind of stepping back maybe a second to your question directly, which is what funds that typically would people buy? I think clearly the most common ones, in terms of if you're talking about the largest from an assets under management perspective, by far and away the largest one would be the S&P 500. Now, we don't offer that particular fund, but you can imagine that that's clearly a popular vehicle for a lot of people, specifically investors who are investing for the first time, where they're just buying, they're just getting exposure to the stock market more broadly, don't have a view on which stock is best to buy, which sector is best to invest in. Just have a view that potentially the stock market could go up over time, and therefore just want participation to that. That's by far and away the most popular. And then I think you have other ones such as the NASDAQ 100, also a very popular benchmark. When we say benchmark, we mean index, which is followed by a lot of people. That's typically synonymous with more technology-focused companies. But again, that's very popular. Also on the fixed income side, the bond side, you have diversified bond portfolios, bond indices, which are also popular. So I think it's probably not a surprise that the most popular ETFs will be those major national kind of benchmarks or indexes that get talked about on the news media, et cetera, that people are familiar with. That's really sort of where a lot of people look to invest, particularly people who have investing for the first time.
Yeah, and then as you get better at it, then you can start realizing that, I'll pick on, I'm not going to name shares or stocks, but a lot of people say, well, buy this particular stock because it's going like gangbusters this year, and you buy it and it's $400 a share, and it ends up being, getting up to like $450 or $475. It's like, okay, so you're making, $50 to $75 a share, not bad. Or if you buy a stock that, debuted at 20 and you bought a bunch of shares of that, and then it jumped up to 400 or 500. Well, needless to say, same share price, but what you got is a lot different. So a lot of people say, well, I gotta own Tesla, and I gotta get Zoom, and I gotta get, all these big players. I'm like, what's your goal? And again, I'm not an investment advisor at all, but I talk to people and say, ask your advisor to ask you, or ask yourself, what is your goal with this? What do you want to do? Are you just doing because you're bored? You want to play around with stocks and you got some play money? Well, fine, go for it. But if you're investing for your future, what are your goals? Work backwards, as Steve Jobs told us. Okay, well, then you need to adjust accordingly and figure those things out and get, take some time and get some understanding on, in working with, individuals like yourself to get a better understanding of what the options are. Because everybody goes to the shiny object of the NASDAQ or the S&P or the Dow Jones Industrials were up this. So everybody thinks the whole market was dead. We dropped everything. And like you look at some investments. Oh wow, one of my investments was up 10% today. Chicken Little screaming over here, and I'm like, oh, today was a good day. But it's just, the diversification, like you said, is so important. Don't put all your eggs in one basket, because if a particular sector, oil and gas, for example, that's not an investment that looks really good at this particular moment in time based on what's happened. Not to say that it won't look good later. Don't know. But again, when you diversify, it minimizes those, kick in the teeth type of events when the market does, have a large drop in investments. And by all means, if you're in this for the long haul, don't worry about a day drop or a couple days drop, because the roller coaster will drive you batty if you look at it every day.
Yeah, exactly.
Awesome. So, well, I've enjoyed our conversation today and love talking about investing. Could do that all day, and I wouldn't say, okay, what should we do that? No, that's for people to reach out to you and talk about. So where can people find out more about you and this awesome organization you have?
Yeah, so people can reach out to us. The website is graniteshares.com, just as it sounds, granite like the stone or the rock, shares as in shares or stocks. So graniteshares.com is our website. You can see obviously what we do, the funds we have available, and you can contact us directly through our contact us page on the site.
Perfect. And I'll definitely have that in the show notes. So, Will, thanks again for this awesome work that you do, and continued success with the investments and navigating through this ever-changing world.
Exactly. Michael, thank you so much for having me on the show. It's been a pleasure. Thank you.
Thank you.
Thanks for listening to the Breakfast Leadership Show, part of the Breakfast Leadership Network. Visit breakfastleadership.com for tips on empowering your business and your life.